Michael. You prefer Michael or Tendai?
Either way,
Because I see.
they're all my names. They're all my names. Yes.
So, Michael, I just want to find out from you. You have been working outside Zimbabwe for quite a number of years,
Yes.
and you have had conversations on different levels
Oh yes.
with different people. And when we're looking at Zimbabwe,
Yeah.
it's a growing economy,
Yes.
now predominantly supported by the development of the small to medium enterprises.
That's true.
How do we attract investment as SMEs?
Okay. Yeah. So I'm going to say this way. Before you talk about attracting investment, there must be modalities and other fundamentals that must be in place. For example, we're going to say, before you attract something that is valuable, you are expected to have some fundamentals in place. So in this case, we're going to think about, when you want to attract an investment, do we have systems in place for an organization? If we have systems in place, so you get to a point where you're able to meet at a point of consonance, at a point of convergence, at a point of things are in tandem and congruence. So now when you do that now, it will be now then a next step now to go further. Say, okay, fine. All my financial statements, they're in place. All my regularization from a point of legal point of view, the ZIMRA, everything that's aspects of legal, they are being met. Now you're going to say, okay, fine. How can we have to tap this kind of investment? So I normally talk about strategic alliance. Strategic alliance, now you're trying to find what type of industry are you in? And when you discover that you are in a certain environment, whether into agriculture and exporting, so you're going to try to attract what are the companies, either regional or either international, that can correlate and share the same value. So once you get to that point, you're going to reach out to those people. But I've noted that oftentimes, if we reach through regional bodies or some governmental, quasi-governmental, it's now easy so that you can get to the same table. So once you get at the same table, now you must have also an idea of pitching your product or a service. And once you do that, you're going to find that it becomes much, much easier. So I must say that it's not an overnight thing. It's something that is to be arranged in time. It has to be planned. And besides planned, it must be executed in a procedural way rather than an event, but it is a process.
You say you have to negotiations become easier for an SME when they have a connection or an association with another bigger body. We have seen over space and time in Zimbabwe institutions that come in with the mandate of supporting medium enterprises, startup companies. But how highly beneficial are these? Because there are so many of them. But how do I tell apart that this is the best institution for me to be associated with as an entrepreneur?
Yeah. So from an entrepreneurial point of view, remember, we don't just work 8 to 4, but we're going to find a way, like when we have time for us. I normally call it a place where the art of reflection. If they're small entrepreneurs or small business owners, they're going to come up where they have like what we call board meeting. I know normally we call, board meetings and everything. But it doesn't necessarily mean that we're going to unite, we sit down, there are allowances, there are drinks, there's some, refreshments there, and then we discuss. But it can be a boardroom where in our mind, we're going to set up a structure. So I'm coming to a point where the fundamentals, they are there. When they are there, how are we going to take? Because for you to know that this is the best fit, they normally call it the best fit. The best fit so that we can have a strategic allowance with this company is because we identify ourselves by having a vision. But you're going to find most of small entrepreneurs, they might not have that kind of like vision. What is really your vision? What do you want to achieve with what you have put on paper? Because when you do that, you are able to explain all the details to each and every employee. Now it's going to be very easier. Now, okay, these companies, they have come. they've come on board, but they're not going to say, we're going to fund you because we picked up some gray areas, some red flags, A, B, C, D. But they're just going to fold their hands and just find you've done memorandum of association, but there is no investment that's going to come because they've identified that there is no best fit. So the idea is we want to align our vision, our objectives, our objectives so that they can align with these international funders. Because at the end of the day, there's no one who's going to give free money. There is no cheap money in business.
Yeah, true.
Because you want to see, if I invest this one, am I going to get return on investment? So if there is no return on investment, at the end of the day, you just see the relation, they just go quiet, and there's nothing moving. And then at the end of the day, we say, oh, I don't think they had appetite for investment, or we need to look for venture capitals, we want to look for other things. So the first as paramount, as I've said before and alluded, is let's have a structure. And let's have a structure. Let's find some financial consultant. Let's talk about business consultant that have interacted with people overseas and internationally, because you're going to find that they have that kind of skill. It is about culture. It is about how we approach. It is about how we interact, even if it's not just on a small level, but even if at a higher level. So when we have those in place, you're going to find that attracting funding, it becomes a little bit natural rather than forcing.
So with regards to not only attracting funding, I want to look for funding.
Okay.
I've already set up my small company.
Okay.
There are not so many options for me right now in Zimbabwe. What would your advice be in terms of raising capital for a small business?
Right. So I would say raising a capital is very, very important. I know we have many forms in finance where we have the debt, raising debt equity, and then we have some kind of, all those kind of things. But we want to apply it closer home. I think it might make more sense from an international point of view, from the US market, but we are going to find that markets, they're always the same. What's different is about the macro external environment and the capacity to have availability of capital. Like in the USA, we have the SBA, which is more like a government supporting small businesses or entrepreneurs through funding. But you're going to find that we also have, I appreciate that we also have, I think, SEDCO, the government also kind of funding platform that has been put in place. But I'm going to say also, even if there is funding, we must be able to create that capacity, as I always say. Because once we have that, it's going to be easier in terms of tapping. But we must also quickly say, when these fundamentals are in place, as I've alluded before, it's going to be much, much easier in terms of attracting funding. But we don't just wake up and think that my business is going to be funded, right? You have to have a pitch deck. You must learn how to, nowadays there's the YouTube. We are in an era of internet where almost everything, I call it a public university. So a public university, when it's around, why not tap on it? Why not just take it, okay, I want to come up with a pitch deck. Let's not just look about ETC. How am I going to structure it? Look for a specialist. Look for financial advisors, business consultants. We are going to pick this one. How are we going to have this so that we are going to have competitive advantage? We must know that. It's not just Zimbabwe that is, international investors are coming. There is Kenya, there is South Africa, and there are many. But the prize go to someone who has heavy structures. They are led by system-driven rather than personality-driven. Because when we have personality thing, that's where now someone wants to own everything. But you can't know everything. Have that international. Come to people like, okay, we can speak now. I'm a financial growth consultant. Okay, this is what I want to do. You have the international experience. How are we going to partner in this kind of so that we are able to get funding? Because when we get funding, it's not just one SME who is benefited. It's going to be local, from local, it's going from feed into productivity, from productivity, it's going to feed to gross domestic product, GDP, and then it goes to national, etc. But when we show the readiness and the ability for us to compete, ability for us to attract, once we attract, we're going to find people, they work in a network, more like a consortium. And the consortium, they're going to come and they know that people in Zimbabwe, entrepreneurs in Zimbabwe are able to cooperate. And once we fund them, we are in a position to see that we're going to get return on investment. Because it is every investor that once I put my money, I must get return on investment. So I think it's paramount that.
A lot of people have talked about, going to get a loan facility or debt as a means of financing startup companies. Is this advisable from where you stand and what you've seen the world over?
Yeah. So from my point of view is, okay, fine. It's a form of business, right? It's a source of finance, debt financing, which is very correct. But I believe that when you have debt finance, when your house is not in order, it's not going to work. Because what you're going to do, you can't leverage on debt. You're going to leverage on systems. Because when we have proper system, they are able to generate. Once you generate the system, they are in place, then you're going to take the debt to augment what you have. It could be brilliant in terms of ideas. It could be brilliant, like, so you're going to look, what would be my competitive advantage? I never like this term because competitive advantage now is going to tell me I'm going to do better than this and that. Okay, if this investor now, if they come to me, they're going to find not investing in A because A has these deficiencies, but me, I've got the positive. For this one, on the financial side, I'm very competitive. In terms of the systems they have in place, I've noted international investors, they look at systems. Are they systems? You're going to find that the US government, the US market is driven by systems.
Okay.
The systems, like, if Rumbi are not today, the business should go on. It's not about you as an individual. But you're going to find now most entrepreneurs and small business about Tendai Michael.
Yes.
Them Msiama thing, right? But that Msiama thing that we cannot drive anything. It should be about, from a corporate point of view. If you win, we win. If they win, we win. So that kind of system, because it's based on system, whether you're at work or you are not, because the systems are in place. So you're going to find it's going to be a competitive advantage because the investor, they look onto these things. As they look at something that is intact, systems are intact, it's compact. And because of that, you're going to find it's much easier and it makes it smoother in seeking funding.
Right. As we are slowly winding down our discussion, debate has also been around angel investors and negotiation as well. Even when you get an investor, negotiation on the share aspect. What are the recommended ratios? Because a lot of startup companies, they want to come up with synergies, they want investors to come in. But ndinofana kugumira papi, where do I end in terms of being generous and understanding that I have an investor, but I also have a business to run?
Yeah, so it goes back like, before we come into negotiation, you're going to have as your team as a manager, with your team, what are we expected to get in this one? What is really your value proposition? Because if you don't know your value proposition, you don't know your value. It's more like someone who's just done a master's degree and everything. Then you go to a company and they said, we're going to give you $200 or whatever amount. So at the end of the day, before you just go to an interview and everything, you're going to do a research.
Yes.
What would be the appropriate amount, that is the salary or the paycheck that I'm supposed to get? So once you have that, you're going to go on the team with that in mind. Number two, you must know the product or service that you're providing. What is valuable, how valuable it is. If an investor would go to country A, B, C, D, can they find the same homogeneous product, the same product? So all those things, they are fundamentals that can feed now into the discussion. Should we get 70%? Should we give them 30%? Because we are the originator of this one. So all those things, because it is about value. I always say entrepreneurs should strive to lean in what I call blue oceans. Blue oceans, these where they create competition. There is no competition in that. You're going to find now, when you focus on the blue ocean companies or industries, you're going to say, I will just give you 5% from angel investors and VCs. Because why? It's a market where it's going to be imitated. You cannot mimic that market. But when you operate more in red oceans, this is a saturated. This is a market where there are many players and there is no barrier to entry and exit. Because of that now, you're going to be limited now. So the aspect now kicks in. Is it 30% for the problem? What value is it in that? So to me, I center it on value. What is your value? What markets are you operating? What is a competitive advantage? All these determinants, these are paramount in deciding, can we go for 70 and 30? So I'm not going to give a yardstick, a general yardstick, like you must go 70, 30%, you must go this and that. But why not innovate? Innovation is not just about the a technology, AI, and everything. Innovation is about the product that I'm going to have. How can I, the only producer or service provider in this? So once you do that, you're creating a new market. As you create your new market, generally value drives towards that. As value drives towards that, customers, compliance, stakeholders, suppliers, investors, they flow because you have created something that is valuable. And that's your competitive advantage.
Now I'm reliably informed that in a few hours or in a few days, because we're not too far away from Thursday,
Okay.
you are going to be speaking at a public convening of CEOs in Zimbabwe.
That's true.
And I just wanted to find out what are some of the highlights that you're going to be focusing on that maybe entrepreneurs will want to follow those conversations?
Yeah, so I think it's about exploring opportunities that we have in our country. We're going to unlock values. We're talking about bringable opportunities. So it actually aligns and coincides with the discussion that we are having here about exploring options where we can have international funding, investors, etc. So we're going to deep down, but now we're going to try to give some case studies of the things, because we are informed by the past, by history, so that we are able to relate to what we're going to do today. Not just today, but even if in the future. So you're going to find that on Thursdays, I'll be presenting on CEO Roundtable. It's a good opportunity to dig deeper, and employees, not just employees, because we talk of stakeholders, as I've alluded before, small enterprises, they have a greater role to play. But we're going to discuss also further, like how can they have proper systems? How can they have proper fundamentals such that it becomes highly attractive for international investors? I think these are some of the things that we are going to dwell and dig deeper.
And recently, Forbes magazine just published that Zimbabwe is ranked in the top 10 of some of the destinations to be visited in 2025-2026. What does this do for the investment environment in the country?
So it tells us that there is high appetite for investors to invest in this country. And in that, it gives us a good and a solid platform. Actually, it's a good marketing platform for us. Because, Forbes, once they talk, everyone listens. But it's about, are we availing ourselves so that we can meet? Because at the end of the day, it's about meeting opportunities. Now the demand is being stimulated. It is stimulated, but what are we doing about it? So we need to throw ourselves so that we can meet to the demand of demand. I always say, when all our things are fundamentals, when our systems, they are in consonance, they are in tandem, they are in congruence with opportunities outside there, value can be extracted. And this is, I know.
Thank you so much, Michael, for that wealth of information. Looking forward. I will definitely be following you on your social media platforms, and just to continue having those discussions around what we need to do as entrepreneurs to also be able to gain the best from the environment and especially raise capital.
Oh, yes. I think before we go, I also wrote a book. It's published right now. It's at Publisher's House. Yes. It's written Builders Who Scale. So it talks about scalability. That book, I can tell you, is the best book that entrepreneurs, not just entrepreneurs, it goes to medium enterprises. It goes to big companies, like the CEOs. How can they extract and support also small businesses? Yes. But in extracting this value, it's not just a government thing, because government just creates a platform. But private players should come on board. How can we try to have strategic alliances with these small companies? How can we market them? How can we help them? Because it is a collaboration. When it comes to GDP, it becomes national. It goes beyond small player. It goes beyond a small business owner. I think it'll be interesting to learn more.
Yes. Speaking of books, before we go, you have written a number of books.
Yeah.
Maybe just share some titles that also relate to growth of entrepreneurship as we are rounding up?
Yes, yes. So I wrote my first book called Swimming in Murky Waters. So in this one, I was trying to extract how can business use the blue ocean I've alluded before, trying to attack a new market. But as we're attacking the new market, I call it attack, refine, and readjust. So in doing that, we're going to find that business is going to tap new opportunities, new innovative way, unlike operating in red oceans. So it can help businesses and also even big companies.
Thank you so much, Tendai, for your time. And we'll definitely be engaging with you, even all the way from Washington, D.C.,
Oh, yes,
just to trade notes and just offer guidance to the entrepreneurs.
Thank you for having me.